Hello, friends. Today we're taking a look at Apple, ticker symbol AAPL. This is a great company. We'll be looking at the performance of the stock for the past 5 years. We'll take a look at the last earnings report on October 31st. Then we'll look at the performance, what they have been reporting in the last 10 years, and we'll be trying to figure out a fair value for this company. Welcome to Money Talks with Martin Reyes, where we learn to take care of our money and find great companies at great prices. Apple in the last 5 days has grown 3.25%, which is great. The last month, only 1.6%. Year to date, they're up 23.27%. And in the last 5 years, great 254.4% growth of the stock. This is a great growth for this company. Analysts believe that right now it's a buy. They have set a target price close to $240, which is close to the price that we have right now. It is trading right now at close to 40 times earnings, the PE, and they do pay a dividend of $1, and that is about 0.42% of the current price. Apple is one of those companies that I own. As you guys know, I have been sharing with you guys the 14 stocks that I own right now, and Apple is one of those companies. Let me show you. Apple, it's about 10.63% right now of my portfolio stocks. And I bought most of my stock at around $173.09 per share. And so far, I have made 37.11% on this holding. I'm really happy with Apple, and I'm not planning to sell. I think I'm good where I am at 10%. I don't like having most of my stocks having more than 10% of my whole portfolio. I do want to encourage you to subscribe and like this video if you like it. If you don't, just actually also press the don't like button. That's okay with me. But I'm actually looking forward more of your comments, your feedback. Once I'm done with my 14 stocks that I am showing you of where I am and what I'm doing, I will going to like to start analyzing some of the stocks that you are interested on. So let me know what I should be looking at. When it comes to earnings, they reported earnings on October 31st. They beat both an EPS and GAAP, but just by a little bit. When it comes to revenue, they also beat a little bit by $500 million, which it sounds like a lot, but when you consider that the actual revenue for the quarter was almost close to $95 billion, so $500 million is not that much. They will be reporting again at the end of January. Most of my companies seems to be reporting at the end of January. And a lot of the EPS, they're expecting a growth of $2.36 for the EPS, which it makes sense because, of Black Friday and Christmas season. So all of that, this is a very good quarter for Apple, hopefully. And they're projecting $124 billion of revenue. EPS revisions in the last 90 days, there's 6 up and 8 and 14 down. So if you are looking to buy Apple, I will probably be paying a little bit more attention and checking out what's going on with them. When it comes to looking at the last 10 years, revenue has been growing close to 10% in the 10 or 5 year. However, as you can see here, between 2021 and today, it has remained a little flat. The growth has kind of slowed down. There was a big jump on the 2021, and that is where it shows a lot of that in there. So just keep an eye on the revenue growth. Uh, the gross margins average on the last 5 years is 43%, which is pretty good. Earnings, once again, just like with revenue, there was a big jump on 2021. In the last 10 years, it's been growing at 10%. Last 5 years, 13%, but a little flat in the last 3 years, which is something that can be a little concerning when it comes to Apple, although it seems like they are looking to accelerate some of that. Profit margins are at 25.3%. Free cash flow, same story, has been growing about 8.8% in the last 10 years and 11% in the last 5 years, but a little flat in the last 3 years. Free cash flow margins at close to 27%, and free cash flow yield, it's pretty nice at 3.8%. That is actually pretty nice as average. Now, that's the average in the last 5 years. So if you want to figure out what the free cash flow yield currently is, let's do it right now so I can teach you how to do that. You take the free cash flow per share of $7.06, and you divide it by 237.33 times 100. It gives you, right now it's at $2.97%, which will make it a little overvalue from the yield that it normally has been given. But at almost 3% is still good. Book value has been going down, which is not really good. I will encourage you to look into the finances and see why this book value is going down. The returns on of asset at 20% is good, and return on invested capital at 38 is great. Dividend has been growing a little bit compared with other companies. It's been growing at 7% in the last 10 years, but only 4.27% in the last 5 years, with a payout of 15%. That's pretty low. I know that Warren Buffett has been selling, I believe he has been selling Apple, and some people are worried about that. When it comes to their debt, they can pay their long-term debt in less than a year with their free cash flow. When it comes to outstanding shares, the last 10 years have been going down about 4% a year, and in the last 5 years, 2.55%, which is great. Now, I'm going to be jumping into the fair value, the fair value evaluations. I just want to let you know, remind you that I'm not a financial advisor. Everything that I'm saying here, I'm just sharing my opinion. It's for educational purposes. You are responsible for your own investments, so I will encourage you to not necessarily invest based on what I say. I'm just sharing with you. I'm trying to share what I have learned, what I'm seeing, and also I'm looking for you letting me know if I may have missed something, or if you disagree with anything that I do. I want to learn also from you. So leave a comment below if there is something that I may miss or something that I should take under consideration. When it comes to historical multiple valuation using the trailing 12 months, since that is the fastest growing, it is a fast growing company, it says that the fair value is 171. Now that is part of that's because of the average of the multiples. I would not really be, 171 is too little for me. When it comes to the revenue based valuation, it looks at a future return in 5 years of $422, including a fair value of the stock and the dividends that we'll be receiving. If all the analysis that I do, I try to get a 15% return per year minimal. So if we discount it at that, that will be a fair value of $211.42. Growing the EPS at 12% and looking at 5 years from now at a 40 PE, we're looking at a $214 fair value. Using the payback time valuation, it gives us, growing it at 12%, gives us at $208 as a fair value. A discounted free cash flow, growing at 12%, discounted at a 15%, it gives us close to $200 fair value. When it comes to the owner's earnings valuation, it gives us a $331. When we put everything together, it gives us an average trailing 12 months fair value of $223 with no margin of safety, which it's a little lower than what that it's trading right now. It would put it close to about a month ago. However, some of you asked me, why is it so low? And remember, I am discounted at 15%. If you discount it at 10%, it probably will be higher, which is what most people use. I will probably, when I'm looking my own valuation, I'll take the multiples valuation out. And that's why I will be looking at a more fair value, more closer to $233. My argument is just that the multiples right now historically has been lower, and Apple, I think, deserves a little bit higher valuation. So $233 will put it close to where we are. However, if I wanted to put a 15% margin of safety, that will give me close to $200 to jump back in. Or if you wanted to maybe just have a 10% margin of safety, that will put you at $210. So those are kind of my opinion. I will probably not be looking to add any more just because it's already 10% of my portfolio. However, if I had a half position, which is 5%, or if I would be looking to jump in, I will probably be looking somewhere between the 200 to 210. So that's kind of my opinion, where I am. If you have any questions, please put them in the comments below. Subscribe, leave a like. Let me know what stock you would like me to analyze after I'm done with my 14 stocks, and I hope to see you in the next video.